great to have you here today, and it's great to go through things. So I guess we'll get stuck into it straight away by taking a look here at one of the big ones, which is the US 500. We've got it on the chart here. We have the 6,500 level, so we'll just quickly go through that. 6,500 level here. And then, of course, we've got that double bottoming kind of thing in the direction of the overall trend. And we also have, of course, had a pretty strong breakout. The big one was the weekly close, which kind of means that at least into earnings so far this season, we've got a lot of strength coming through. And one of the things about this earnings season has been pretty unique so far. I think we're hitting at about 85 to 87% beats. So that basically means that the market is pretty much beating across the board. And that's the type of thing that often gets optimism. So it could be a buy the rumor, sell the fact. But for now, anyway, the trend is in the direction. So this was the double bottom we were talking about in the direction of trend. It dropped, it rallied, it dropped, and then it broke through. So Ty, how good is getting a pattern in the direction of trend?
Oh, it's magnificent. We always say that the best patterns are going to be the ones that are in the direction of the prevailing trend. Lots of studies have been done about double tops and double bottoms and head and shoulders and inverse head and shoulders, but I don't know if anyone's ever done a study, and they probably should, where you only take the patterns that are actually in the direction of a prevailing trend, and that prevailing trend may well be only 2 time frames higher than the one you see the pattern on. It doesn't have to be like a massive trend, but yeah, it makes a massive difference. So these sorts of things, the ones we look for, they're an A-class direction of the prevailing trend, like this one is. It's an A-class pattern, and you can see this one played out beautifully. Tested the neckline from above again, and yeah, happy days. Really, really good pattern.
We're seeing this happen across all of the major indices in the US at the moment, strength on strength on strength coming into these earnings. So again, if you missed before, we have Apple, Microsoft, Meta, Amazon, Google, like all the big names are, of course, announcing. And what's happening here is we're getting quite a lot of strength coming into these events. So if you have a look at any of these big mag stocks the last couple of days, we'll just have a look at these trends here. You've got Apple, of course, very strong, making new all-time highs, breaking to those levels. You've got Amazon, obviously, coming up to a very key resistance. This is going to be an interesting one. New higher high. It's been doing not much for quite a long time now, actually, on Amazon. So to get back through 228 could be a big deal. Then we've got, of course, Google, which is a flag style pattern. So this one here is, of course, a flag style pattern that you can see in the direction of trends. This actually acted pretty much how a flag usually would. You've broken to a high, of course, pretty good signal that the flag is live. And then, of course, it's pulled back down to the flag area, holding the stop loss zone, and then it's actually rallied forward again. So that's pretty cool technically, and that's come through. And then, of course, we've got another one, which is NVIDIA, which has been in a really nice holding pattern for a while. And this one's got another little double bottom in the direction of trend. So just to show, I guess, everybody, there's been quite a lot of abundance coming into this earnings season, but there's also just been a lot of opportunities. You know, we've been talking about gold and silver for ages, and Ty, and it's just those actually don't look anywhere near as good as where they were obviously a few weeks ago when everyone was getting hyped. But that just shows you how things change and things rotate.
Yeah, 100%. Yeah, no, it's we will certainly touch on gold and silver in a minute, but yeah, there's some very, very strong patterns emerging out of these tech stocks that are obviously running on the hype of pretty good earnings. So very, very good opportunity. But I think it's probably a good time to stress, and we say it a lot, but I think you can never really say it enough, to only really act on quality trades, because there is a lot of quality out there, and realistically, if the patterns aren't there, and you can't really find something that's really technically sound, look somewhere else, because in any market there's always going to be something happening, isn't there, Tom? Like, you're going to have flat markets, you're going to have markets that are out of control that are hard to get into, but there is always going to be something that you can trade that is technically sound. So yeah, we really emphasize the fact that you really want to be only trading things that you're really comfortable with, that make sense. I think that's probably the key. The key for today is making sense, I reckon.
Yes, I think that is very important. Also, just keep your risk in, of course, line as much as possible. So here's gold. So this one actually had one of those classic patterns on it, which is more of a double top. Now, I guess the question at the start today was, will gold be affected by earnings? Not generally directly in terms of, obviously gold is its own asset class, but at the same time, if you start to see a risk off across stock markets, often that can affect different areas of the market. And you'll see things like the US dollar start to do different things, which obviously can then have a knock-on effect into gold. And also crypto can have an effect as well with risk on, risk off sentiment. This was a pretty classic case of a double top. The double top completed at 4,000. But the problem with gold was it went up maybe a little bit too quickly. So we were talking about this in our previous Tactical Tuesdays, how gold was on one of these once in 100-year runs. You know, the fastest, the best run it's ever gone without a 10% pullback. So that is in itself pretty extreme. But if you have a look here, you've got this 9% almost decline straight away. We're now sitting at 10, so we've hit that magical number. But we have taken a lower low. So in similar circumstances such as this, Ty, would you be buying gold here, or do you think that this is way too early to tell? This is more likely actually short still for now. I think we've maybe dropped Ty on the audio. Can you guys hear? Oh, there we go. We're back.
Yeah, I think I'd rather wait for a solid base. Right now, I think trying to pick a recovery zone is fraught with a little bit of danger, actually, because I think that there's it went up so quickly that there's no substantial level where you have confidence that it's a rebound zone. So I think that I think we're obviously trying to change a prevailing trend here, and we're all but done on the 4 hour. You can see we've got the lightning bolt, lower high, lower low. So in my mind, this trend is now down. And you wouldn't want to fight a trend until you've actually got something substantial to land on. So until we see a substantial landing zone and a reversal of this trend, so another series of higher highs and higher lows, I'd be leaving it alone.
Yeah. So I think something like the daily 50 comes to mind here a little bit for something like gold. You can see here the daily 50 has actually been one of the best moving averages for this pair. You've got April 25th, April in 25. You've got May. You pretty much have June, July. July period again breaks through, and obviously now it's gone so far above it that probably wants to come back to it. That's actually at 38.50. That's going to be a very interesting level. You do also have little bit of demand or support on the left-hand side of interest. I know Craig put in here, he said, "Hi guys, I let FOMO take hold of me yesterday. Today I'm paying for it." Do you mind if I ask, Craig, what pair were you looking at in particular for the FOMO? See where you're feeling that. Sorry to hear you did have a bit of FOMO. I'm assuming it's on one of these two metals. But yeah, look, the thing is it's, these are powerful emotions we deal with. Remember, the two most powerful emotions in the markets are fear and greed. And obviously, the market's very good at getting us to buy into those positions. I remember just a few weeks ago, I thought, man, imagine if you hadn't had gold, would you have felt like you needed to be in? The answer, of course, was yes. And that's why when we started to see lines of people lining up for bullion, it was kind of like one of those signals that, oh, wait, maybe we need to we need to be a little bit careful here because, of course, everyone was getting really hyped. Silver's very similar, guys. It's coming down to some key levels. Again, daily 50 is a key level to look at. But as Tyro mentioned before, the current trend is actually down now. And as you usually do see, when you get this type of hyperbole move, you often do get quite substantial pullbacks. So you often do see some pullbacks coming back through.
Yeah, I think silver might be one of the more dangerous ones you got to trade. So I think I'd be really careful with silver. It's probably the best advice we can give you there. It's really, it's the one key level. It's very, very key levels. Coming up, no question. But I would sooner trade the reversal on gold than the reversal on silver.
Yes, and I think the thing is as well is, you're going to need to look for those levels. So things like 49.60, 49.50, this high over here will probably need to be broken to really get a swing trader back in. So going to need a little bit more. We'll move over to oil. Oil had some interesting trades on it. It's now at a supply. So you can see here the triple tweezer bottom. The supply on the left-hand side that it's come back up to. So that previous support becomes resistance area of interest. And if we actually break this down a little bit, you'll notice it did give some signals on the small time frames that it's kind of a little bit bearish. So you've got two signals here. You've got one that said, okay, someone did bid up. Someone was bidding this thing back up, which is pretty cool. Then it hit into this supply area, and it's obviously gone a high, a low, a higher high, a lower low, and it's rallied up. Now, there will be some people shorting it here, rightfully so, because oil has been quite weak, and they may have stops above here. I think that's an important fact. If this goes down, okay, cool, that's pretty much what you'd expect to happen at this present time with this present information. But if it does get through this high, this 63 level, it's probably looking fairly strong, you'd have to think, for further gains. And I think oil is at that precipice, because I'll just show you guys on the higher time frames. If we go to the weekly here for a second, what you're going to see on gold, on oil, black gold, is that we are at that point which has kind of held every other previous major sell on oil. So if we go to the monthly here, you'll see something similar, which is this very important zone that was back from 21. And you can see here as well, it's rejecting at this stage. Now, we're almost at the month end of October. The monthly, one of the most important overlooked candles, I think, Ty, even by scalping. I know it seems like, why would you use it for scalping? But surprisingly, it's actually good for all time frames. The monthly is going to close. And if that closes as like a bullish hammer projection, that's going to be a fairly strong sign that there's more bulls around, isn't it, Ty?
Yeah, absolutely. And I think from a technical standpoint, oil has been very sound right through this. I think those trades off that triple tweezer bottom was just sensational. I think it was a really good trade, and it hit the level. But I think you're right. If we break this high that we're looking at here, I think 60 to 66 is probably on the cards. Where you've got that line right there, I think that's probably a really solid aim point for it, and it is sitting right on the 20, as you can see on the 4 hour. I think we just need a little bit more momentum, and there's a really good chance we might get that $3 or $4 movement up.
Yeah, so I think if you ask me right now, I'd probably say there's a little bit of bearishness around this supply. That's actually triggered some shorters. But obviously, if the market moves a little bit higher, as you said, probably going towards the 66, which is that next level. So again, two ways to look at it. Actually, both very valid. And that's the thing about trading. You can switch like this depending on the evidence that you're given. And that's the beautiful thing about charts. So US oil, will it be impacted as much by earnings? I tend not to think so, because this one's going to be actually more driven by geopolitical stuff. And we do have quite a lot of geopolitical tensions and all sorts of things going on here in 2025, especially right now. There's ships everywhere, Ty, that are circling different things. So
oh, yeah.
I didn't even know what happened yesterday. I heard there was like airplanes that were hitting each other. Oh, my goodness. It's all happening here in 2025 for sure. So, when it comes to oil, you guys can clearly see that there are some really cool cases. And again, this was a fairly not looked at pair and not really cared about pair until just recently. So, shows you the abundance again coming through. Let's take a look at the US dollar and some currencies. Now, this one had a really interesting session. And by the way, for Craig's question, he came back and he said he was in PLS. So, he was trading a little bit of lithium. The lithium can do that to you. It's a very volatile sector of the market. So sorry to hear that, man. But lithium's been on an epic run. If you haven't been looking, it's been like this. So obviously it's getting volatile as it gets up here. Dollar index, you'll notice this is a huge rejection. Now, this is all thanks to the CPI last week that we got on a Friday, which was quite weird. And we've rejected back up. I think that's what it was anyway. And basically, this is a fairly interesting rejection, because what it shows us here is it shows us that somebody sold, somebody bought big time, and they did it all around the same level. How big is this 90, 99, 20 kind of level for you, Ty?
Oh, massive level, massive. Yeah, okay. If we get a break above there, it's going to be... I really like it. I think we've got 100 points from there if we can get a break above that level. It's proven difficult, and if it doesn't get there, that actually tells a lot more about the story than even on the upside, because if it fails to make that even an equal high and starts to sell off, I think it shows a significant weakness in the dollar index, actually. But if we do get a break above that level, that where you've got those arrows there, I think would be the ideal trade. A break initially, a test above it, to test the support, and then if it goes, then I think we're good for the 101.50 or even the 101.80, which is very strong. Which is obviously going to see a weakening euro. But yeah, I like it. I do like that break. It's proving to be hard work, but that rejection on that hammer candle is a big rejection. There's no question about that.
Yeah, I think this would be quite strong if it does happen, and of course that would then feed into things like the euro. So we'll just take a look there. We always look at the dollar index because, of course, we want to get a bit of a lie of the land of the most important currency in the world. But then we also come and have a look at the euro because, of course, the euro is a great trade to that. So if the dollar does weaken, you're probably going to break through 1.155, and the obvious next move is 1.14. It actually loads up pretty well with what we just saw on the dollar index. So I think that's the type of thing we'll be looking at pretty closely, and of course we'll be focused in on looking to see whether it makes the higher high breaks through 1.18, which gets suddenly very strong for the euro and weak for the dollar, or it breaks this 1.1 area. And I would say that at the moment, of course, you're going to be generally in the downward trend when you're scalping and day trading, because at the moment what's happened is we've got low, lower high, lower low, lower high, lower low, up. So there's going to be a lot more people trying to go to the short, which is probably the correct technical move. But things could change. And, the levels to watch are going to be that 1.1780 or that 1.154, because all of a sudden, you're getting 1.14. And you saw how strong that was in the dollar index. Anything else to note here, Ty? 2050 cross, I guess. Well,
2050 cross as well, which is obviously really important. Hasn't done it in a very long time, actually. But I think it highlights how important it is to check out. Look at that. I mean, geez, the last time it crossed was about 105, wasn't it, or something like that? But I think what it highlights though is how important price action is. I think a lot of people fail to follow the price action adequately enough to give you the indication of what price is really doing, but it is the true only leading indicator. And knowing these lightning bolts are here, like that's potentially setting up for both ways. It could easily go up or down, but the price action is going to give you the clarity there. So really important to look out for those lightning bolts.
Yeah, and very interesting levels here for those pairs. All right. Well, the euro, obviously, again, you could look at it from either level and check it out. Let's have a look at Bitcoin, because I've been actually pretty strong on Bitcoin, and it's had that liquidity grab. Of course, this was the famous giant session here of now the largest liquidation ever of retail traders in one session. A lot of money. I think it was some unbelievable 1.5 million accounts or something. So it's pretty brutal stuff. Yeah, it was a huge amount. And what's happened since then is obviously we've stabilized a little bit and we've made it back to this very important level. And I've been talking about this for quite some time, which is this 116,500 zone. And you'll notice we hit it yesterday and we rejected it with a little shooting star candle. Now, that, of course, looks bearish when you look at it. I'm not sure I would short here, but this is a resistance. And there will be people trying to short here. And if the market now goes above this and closes, which is still around that 116.5 level, then I think that's actually quite strong for the market to keep pushing up. For now, we are still trapped in this range, and I wouldn't discount the possibility of a 98,000. I'll tell people just not that this is technically, but Bitcoin's well known to do a cycle thing. Around 550 days after the halving, you generally get the topping of Bitcoin. At least that's what's happened the last 2 times. Very close, within a week of each other. So everyone now knows that, and obviously it's become that repeatable concept is going to happen again. And that's the big one that's on the cards here. It's like now or never. And will we actually break the halving cycle and Bitcoin continues on for a little while, or are we going to continue the weakness? Because remember, these types of points have often been where we enter into a crypto bear market, which then continues for multiple years, or like a year and a bit. So it's usually pretty brutal. A big shooting star here, Ty. Big decision. Your thoughts?
Yeah, no question. I think it is a very heavy area of resistance, and it's a do or die time. Like you say, I mean, it could be if it breaks through, you'd think that sort of 120, 120 and a half was probably the next target for it. But if it fails to, and the shooting star plays out, then I think probably back at 107, 106 is probably the target. I think it's got good range, even though it's right in the middle of a pretty big cycle. I think you've got $6,000 or $7,000 either side of it, which is a good place to be.
Yeah, very key area. And again, break of this 116.5, I knew it would be a big zone, and it almost tapped it exactly. And this is such an important level for it. So obviously strength could come off that as well. And crypto's been pretty good. You got a lot of people getting hyped as well about exchange traded funds, government information, all sorts of things going on. So it's going to be an event. So the other one that we often do cover here is the Chinese markets. Now they've been pretty bullish, and I think again this was just a case of come into the smaller time frame charts and have a look at it and see what you think. So obviously I've got this blue line here, which I think is incredibly good support, 25,000 approximately on the charts. You'll then notice that you kind of come up, you then almost go down to double bottom, and then you rally through. And to me, this was pretty good signal that if we get a pullback, we're probably going to go long. That's exactly what happened. So to me, it's been a relatively good technical. I think the key is always to look at what's been happening. You'll notice we hit the weekly 20 at the same time, so that's that confluence that Ty and I always talk about. Really important, guys, to have multiple reasons to be in a trade. So you want to have all your real reasons behind there, not just being okay, we're at a support, or not just being on a 20 moving average, or not just doing anything. It's lots of different reasons. And I think this one hit quite a few of those. And last time we hit a 20, we obviously bounced as well. So it was a good kind of signal. And yeah, I liked it. Ty, you still think it's got a bit of legs in it?
Yeah, I think so. Look, it's given us no indication that it hasn't. And it's always better to follow the momentum. Look, I think that pullback's perfect. I mean, at the end of the day, it's come back to a weekly 20, a roll reversal zone that was resistance, which now you'd like to act as support. It's bounced right off it, and it's showing really good momentum. So, yeah, I think it's really good to at least reach the previous high, the recent high. And who knows from there? Like, I mean, there's no question it's in a very strong trend.
Yeah, it's been a very strong trend driven by pretty much central bank liquidity a lot of the time as well. I thought we'd close up here with the Tesla trade, Ty, because Tesla is actually really interesting at the moment, and I want to just show people the power of what I call a pit, so a pullback in time, and the power of understanding the storyline. So here's the area, which you can see here. So it's right at those all-time highs for, of course, Tesla. And you can kind of see that we have consolidation. So the market rallied up a lot, came down, went sideways. And you'll also notice the earnings was actually red, as in it didn't meet expectations. Now, Elon is probably wanting this stock to go up fairly high because, of course, he's on for the biggest bonus of all time if he can get this stock going where it needs to go. So I'm sure he does want that. So I feel like the PR machine has begun. But you can actually see that represented in the chart. So where do we clearly know the supports? Around 410, 420 was not only options put support, but it was also support on the chart. So again, even if you didn't look at the options market, you can see it here in Pepperstone with TradingView, and you can see some awesome action here on these lows. The other thing is this candle here, this really big one, actually happened after the earnings. So the earnings was the end of the day. It was down in after hours. It was down in the session, and then it managed to rally. And it did what was, I think it was a plus 6% switch. So basically from its low all the way back up, it moved 6%. Now, it may not seem like, well, it actually seems like a lot to me, but that's a huge switch in a day. And what it told me was that we're probably going to find a bid, because people don't usually do that for no reason, do they, Ty? The market goes down, everyone's negative on it, negative news, and then all of a sudden it finds a bid. That's a bit of a sign, isn't it, in the old technical world?
Absolutely. Yeah, no, it's look, you've got to understand, we don't, really want to depend on the marketing machine to look for trade, but sometimes it's inevitable, and especially in a stock like Tesla. So, and I think it is looking very strong from here, isn't it?
Yeah. Also breaking through 450 over the last 24 hours. That is actually a huge option level, and it just got above it. So this could also create what we call positive gamma. Again, helps with the technical side. So you've got these kind of things happening here. So yeah, very, very interesting one. Pull back in time. Is it now time to break out? Where's the logical answer for where it might go to? I think just before 500 could be the next target for a lot of these people, because the thing is that the Tesla loves its double zeros. It loves its round numbers because it's one of the most traded retail stocks. And I think that's a great thing here to talk about to end today's show is just remember, whenever you're looking at technicals, especially around earnings season, remember that markets love to gravitate towards just before or just around these big numbers, because what earnings brings a lot of people in, it brings in retail traders like you and I. It brings in generally a bit of speculation. It brings in all these things because suddenly the focus for that one day, that 24 hours, that 48 hours is that particular stock. So this is often where you get a lot of volatility, you get a lot of liquidity, and you also get a lot of those round numbers. So I think it's going to be a very interesting week here for Tesla now that it broke above 450 close.
Absolutely. Yeah, no, it's a good way to close it. I think Tesla's one of the most popular and definitely one to keep an eye on because, yeah, that 500 looks, it's looming large, I think.
Awesome. All right. Well, thank you so much, guys, for visiting us. To recap, I guess the thing that we're looking at here is we've obviously seen the US 500 continues to be in a bull run. We saw a double bottom kind of continue up. We've got US oil with actually multiple different technical opportunities depending on what happens. We've got the dollar, obviously, again, also multiple different technical opportunities. A clear direction for now, though, which I think is the key. And gold and silver is definitely totally different to what we spoke about just a few weeks ago. And in fact, years worth of being good. Gold and silver bullish. Suddenly, even I'm pausing for a little bit here until it stabilizes. So obviously, that's a big one. Crypto 116.5, very important level, at least we think technically on the charts. And then, of course, we've got the Chinese market still looking good with that double bottom base style. And then we've got Tesla at 450 plus. What an interesting level for that one as well. It just shows you there's so much opportunity. We'd like to thank you here on behalf of Pepperstone for coming out and watching this thing live. If you are watching in the comments on like a video description, make sure to subscribe down below and also join us for these live sessions. It's awesome to have your questions in here. Thanks for so many people joining us here as well in the questions room. Didn't get to all of them, but did really appreciate it. And thank you so much. So, Kai, any words of wisdom to leave everyone with today?
No, just be mindful. It is still earnings season, so just trade carefully. I think it's probably the best way to do it. And I look forward to seeing where the markets are at in 2 weeks' time when we redo it again.
Awesome. Thank you so much, guys. Bye for now.
Yeah. Thanks, everyone.